Right. So the second asterisk you had, there was a past client wants to start investing but doesn't want to show income or pay stubs, just wants to qualify based off of the rent, covering the mortgage, and wants to put it in an LLC. And you said, yes, I can help with that. So we are going to start with that program. And that was just summation. And uh, people are, usually W-2, 1099, they get uh, qualified based off of these things. And I really, just to go back into the history, when people see this slide, they think, oh, no doc, stated loans, 2000, early 2000s. That's how we got into the crisis.
Yeah.
But what happened was, just going back on the history, even before you and I got in the business over 20 years ago, those entrepreneurs, when they had to get a loan, they would have to bring a whole stack of paperwork to get the loan approved. So smartly, with the lenders were allowed to do what's called stated loans or low doc or no doc loans, so that they didn't have to supply so many things. Because if you're a smart capitalist, you're not showing your total income as an entrepreneur, because you're going to have to pay the tax man. The one way that hurts you is if you're trying to buy a home. Um, so because they started getting a little carried away with these no doc loans. And the big issue was they were starting to give these to people that had like low credit scores, which is a good way to predict whether people are going to have the ability to pay, which is what it's all about. So because of what happened in 2007, 2008, because the industry just got so out of control, if you had a heartbeat, you were getting a loan. So they have raised the standards of that. And in general, you better have a 700 score if you want to think about doing these kind of programs. Any thoughts on that whole history part of it?
Yeah, like you said, I think when we start talking about, no W-2s or no income, people start talking about 2000s. But like you said, we've gone past that.